Hi guys, welcome back to the YouTube channel. In this video, I'm going to run through 3 different business structures that you need to know about if you want to pay less in tax and protect your wealth. As I've said before, the right business structure really is key in the war against tax, because ultimately this is the main driving force when it comes to how much tax you actually pay, because different vehicles, different business structures are subject to different taxes at different rates. And in this video, I'm going to give you 3 different business structures that you need to be aware of so that you can decide which is best for you and is going to help you pay the least amount of tax. So the first one is the most simplest. This is basically being a sole trader or trading in your own name. So quite often, if you were to buy a buy-to-let property, start selling something online, start offering consultancy services, whatever it might be, you would usually be a sole trader. You simply register with HMRC for self-assessment, start earning money, start incurring expenses. The difference for most people is your profit. Of course, landlords, mortgage interest, that's a different story. Do see other videos on my YouTube channel. But what your profit is, fundamentally, you'll pay tax on, maybe national insurance as well, if the amount you've earned is high enough. And for most people, it's a very straightforward and cheap way to get started. You don't really need an accountant. You can probably do your self-assessment yourself. And as a result, a lot of people do tend to actually go, when you're first starting out, a lot of people do tend to go for this structure because it's just so easy, or they become an entrepreneur by accident. And when you're a sole trader, you'll pay income tax fundamentally. That's the biggest tax that you'll pay. So obviously, if you've got no over income, you'll have your personal allowance at 12,570. And then your next 37 or so thousand pounds, your basic rate band it's called, you'll pay tax at 20%, where your profits fall into that. And then as you go above that, higher rate taxpayer paying tax at 40%. Potentially when you go over about £125,140, that's when you'll become an additional rate taxpayer and be paying tax at 45%. So you can see there the tax rates can be quite high when you are earning a lot of money. So that's why for most people, especially property investors as well, business owners, if you are running a lifestyle business, fundamentally, where you do want it to be less than £50,000, your expected profit from the business, being a sole trader can be a great way to do this. It is relatively tax efficient. You don't need to file annual accounts with Companies House. You don't need to worry about corporation tax returns, paying dividends. So it is a lot easier to manage than a limited company, for instance. But it does have its downsides. The biggest one really is limited protection. So when you've got a limited liability company, of course, you've got limited liability. It's just a company as a separate legal entity that's responsible for things. Where you're trading through your own name, actually, you're doing business as you personally, so people could sue you. And if your business did incur significant debts or did get sued, actually, your personal assets could be liable. So it's definitely not worth taking lightly. So if you are doing a risky business, look to see whether it is worth just paying maybe extra for a limited company because of the protection that it offers you. This then leads on nicely to the second option, basically a limited company. So a limited company pays corporation tax on all of its gains and any income and any profits that it has. At the minute, there's a couple of different corporation tax rates that would apply. So you've got the small profits threshold, which is 19% for the first 50,000 of profits. And this is divided by the number of associated companies you have. Again, check out other videos on my YouTube channel for this. So basically, first 50,000 at 19%. And then the next 200,000 up effectively 26.5%. And then profits over 250,000 goes back down to 25%. So it is a little bit complicated in which rate applies, and that's tiered. So if you had 250,000 of total profits, first 50 at 19, second 200 at the 26.5% rate. So that's what tax a limited company pays. And as you can see, the rates are a little bit higher than a basic rate taxpayer. And of course, remember that when you're paying, when you will pay corporation tax on your profits, you have to actually pay additional tax to get them out as a dividend. So if you are earning typically less than £50,000, very rarely does a limited company make sense, because you've got that additional tax burden, and also you've got accountancy fees, you've got the extra admin. So unless you really did want that limited liability, a limited company probably isn't the best structure for you. If you are growing a larger business and you do expect to be making hundreds of thousands of pounds in profit, then absolutely you can see there that the corporation tax rates lower than the income tax rates, which will allow you to tax efficiently accumulate profit, so you can either reinvest in growing the business, or you can use it elsewhere for property investment or other business investments. The third and final structure, following on from the investment theme there, is actually a group structure. So rather than having just one limited company, actually have a group of limited companies. And I've talked about this to high heavens because it's a fantastic structure to have if you're looking to build serious wealth through business. So if you are looking to start a business that you do expect to scale to multiple hundreds of thousands of pounds of net profit, and you do want to invest in other businesses as well, potentially have a private equity arm to the business. That's quite often what a lot of entrepreneurs do. They build their business up. Okay, it gets to a nice level. Let's start investing in other businesses to grow that wealth and help others. And actually also property investment as well. So let's start buying buy-to-let properties, blocks of flats, commercial units. And having that group structure is the best way of doing that. So rather than having just the one company, you tend to have multiple. And you have a company at the top that owns all of those companies and all of your subsidiaries underneath. And the good thing about doing this is you can move money around from all of the different companies completely tax-free. You can utilize losses. So if you have a bad year in your trading business, but your investments have done well, usually you can offset the profits against the losses. And as a result, as a group, pay a lot less in tax. Also stamp duty exemptions. But the biggest one for most is actually that trading business. Of course, you're growing that. It's making you good money. You can actually sell that completely tax-free because you've got a group structure in place. So this is called the substantial shareholders exemption. And as long as that's a trading business of which your group owns more than 10% of, which pretty much is always the case, you can sell that completely tax-free. You sell that business tomorrow for £10 million, you can get the full 10 mil in your bank without any taxes. So you can then use that 10 million to go invest into property. You leverage that, bam, you've got £40 million worth of property, which will be paying you an income for the rest of your life and for generations to come, because we can help you structure the group potentially as a family investment vehicle, put trust in there as well. And you can see how, it's a complicated structure, but it can work. You've seen the other videos about how a family investment company can help you reduce your inheritance tax and pay less in tax generally. So having that large but complex structure may actually be the best way if you do have basically large and complex businesses. So it really depends. The best structure really depends on what your aim is. If you do want a simple small business, look at a sole trader. If you want something that's a little bit more refined, a little bit more legal protection, a limited company. But if you really are looking to build significant wealth, build significant investments, then a group structure is probably the best way to go. We can help you get all of this sorted. So if you do want to book a consultation to see what the best structure is for you and your business, click that link in the bio and I'll run through over an hour, telephone or Zoom call, what the best options are for you and ultimately, the tax benefits, what you need to be aware of to make sure that really is the best thing for you and you're not making any mistakes. If you find this video useful, as always, give it a thumbs up and smash that like button. Until next time, guys.